Welcome into Market Talk for this Monday, April 18th. Glad you're here with us. Thanks for making us part of your day. I'm your host, Jesse Allen. You could find us on our website online. MarketTalkAg.com is our home on the web where you can find all of our streaming sources, the latest news of agriculture, our social media, and much more. It's all online, MarketTalkAg.com. Thanks for joining us again here today. As we come back from the 3-day holiday weekend, we saw some buying in this graded oilseed market here today. We're approaching some record levels in corn, new contract highs there, new contract highs in bean oil. Plenty to discuss and take a look at today. Here to help us do just that, our good friend John Heinberg with Total Farm Marketing joins us today. John, good afternoon to you, sir. And what a way to come back from a 3-day holiday weekend, not knowing exactly what we'd see. But it's all upside. It's green today in the grain and oilseed markets.
Yeah, a bit of a commodity breakout in general today between crude oil trending higher. We got a natural gas market hitting multi-year highs today, and that just helps spill over into the grain sector. Again, just this concern regarding supplies. We had an uptick of tensions, it seemed like, in the Ukrainian war over the weekend, as well as just food concerns globally, with some of the information that was getting put out there by different groups and agencies about food inflation. All that just kind of came into play. And I'll throw in the fact that, I woke up with 2 inches of snow on the ground here in southern Wisconsin today. It's got the market a little concerned as well. Just kind of one of those days today where the money wanted to pour into the marketplace overall. And we saw some really good results, at least in that grain market today.
Well, let's dive into some of those results today. I want to start with this corn market. We look at corn, the front month contracts breaking through that $8 barrier today, 8.13 and a quarter on the May contract. New crop just below that 750 mark here today. And we think about those all-time highs back in 2012. The national average cash corn price, $8.26 on August 21st of 2012. Do you think we're going to start seeing some of those numbers here as we move forward? What is the prospect and the outlook for this corn market right now?
The first thing that is concerning to me is the fact that we are extremely overbought here in this window. I mean, we've seen money push this market, pretty aggressively now here the entire month of April since we got that acre number. That might be a concerning point to me. But at the same time, we're getting to a level now where it's going to, who's stepping in front of this? Who's the seller against that buyer? And when we see markets sometimes just get into these parabolic type states where things just explode higher, that you just kind of sit back and let it go, like we saw with the wheat market earlier this year when the Ukraine war broke out. Not saying that we're going to go limit up 5 days in a row like we saw there, but just that quick influx of money coming into the marketplace could push this higher. I mean, my charts are pointing higher right now. The only thing, like I said, I'm most concerned about is some of those technical indicators in terms of the momentum and the fact that we're oversold. But at least at this stage, it feels like we got room to go back to those 2012 prices. And even on some of these long-term charts, we got numbers that are pointing to significantly higher beyond that. Now, that might take some confirmation of some U.S. weather later on this year, but at least at this time frame, I can point to a chart today and see where we can get to in this marketplace, just given the technical factors that are out there and the way the money is flowing.
Well, I think about this as well. We look at weather. Obviously, it's April 18th. We got time, but if we have delays to planting, and there undoubtedly will probably be some depending on what region you're in. I mean, do you think that we look at basically 750 new crop corn versus 1520 new crop beans? I mean, do you think if there's delays to planting, that could facilitate some switching of acres from corn to beans, beans to corn, whatever the case may be? I mean, do you think that could possibly happen here just with some of these price levels we're seeing?
Very much so. Just talking to producers already in the northern part of the growing regions, they're a little concerned about things at this time frame. Typically they're starting to get things moving a little bit, and we're not even seeing that. Obviously, we had the snowstorm across the Dakotas here last week. Now, even talk of another potential event coming up here at end of this week and the next week. So we'll have to kind of keep an eye on that as we get closer and closer to May, and the more concerned that this market will be during that time frame. And again, we've got a lot of pressure on the U.S. producer to crank out a heck of a crop this year. And realistically, with things looking the way they are, anything that's going to cause any concerns, any delay is going to bring more volatility into this marketplace, here overall. So it's going to be interesting to see how the next few weeks kind of handle out. If you go look at last year, we peaked out on the 7th of May. It kind of feels like maybe we're building towards that report in May again when we get those new acre numbers and those crop numbers I put together for 2022 and 23. That's going to be an area I've told my producers, and we want to make sure we're thinking about the defensive side if we got something built, because that when we hit that peak, we lost about $1.30 in a real big hurry off that May peak. So, but we've got a lot of different pieces in the puzzle this year. Obviously, the Ukraine war and those lack of bushels on the global scale are just something that's very hard to calculate it into what we're going to see for prices. Not even counting on what we got for weather here.
Now, on the flip side of corn, the soy complex, a lot of great strength there as well. Also, you think with beans, supported well by bean meal and bean oil. What's your thoughts on this soy market, the soy complex here as we get to the middle portion of the month of April?
Well, a couple positive things on the demand side of it today. First off, on Friday, when markets were closed, China stepped in, picked up 30 million bushels of beans. A good mixture of old and new crop as those old crop sales continue to step out there. Right now, at least on the global scale, we are the cheapest bean in the world for the months of August, September, October into the 2023 year. And that's going to keep those export sales moving a little bit out in that window. They'll say the bean sale that we saw here on the weekend was more towards a late summer type delivery window into that area. Go look at export inspections today, 90,000 plus tons today. So, or excuse me, 900,000 plus tons today. If you look at a historical window, we're breaking out of the typical pattern we see here, which is bean shipments slow down as we get those South American supplies. Maybe now we're seeing the impact of the weather down there and the fact that, U.S. exporters are still busy moving beans. So those things come into play. And then we get into the whole bean oil side of the equation, which is tied to crude oil, making a nice move higher here again as well, lifting bean oil up and to the top side of this market. This whole biodiesel, or, we got the biodegradable jet fuel concepts out there that could all come into play yet this fall with some increased crush capacity here in the United States. Just really is going to make this a very competitive market, at least in the short term. Like the move today, we're getting to some spots where we could see some resistance. What we can, if we get another little push here, possibly get a chance to push out, take those old crop beans back to those highs from back in March window or February, March, and then we'll see where we go from there. But like most of these charts are all still pointing higher at this time frame, but beans maybe needed one more little shot to get that next leg maybe kicked in.
Now, how about the wheat market? I know you mentioned Russia, Ukraine a bit, and obviously the weather too with that snowstorm up north. It's going to delay spring wheat planting. I know I had heard some was put in the ground already, but not very much at all. Looking at this wheat market though, that felt like the leader for a lot of the day today. What's your thoughts with wheat here on this Monday?
No, I agree with you there. And it's actually been kind of the leader here the last handful of days. We've had pretty good move in that wheat market, mainly based off those crop ratings. We've also seen some activity kick up in terms of the Matif and the European wheat prices. I believe those markets were closed today, so they weren't trading today. So U.S. wheat's starting to get a bid. We got different pieces of the puzzle here. Again, obviously the Ukraine war keeps things very much in perspective in that regard. You've got the poor crop conditions in the southern plains with dryness, and I don't see a whole lot on the radar coming next handful of weeks to fix those issues. So we'll see what those ratings come out here this afternoon. Don't expect much of an improvement, if any. Then obviously, as you just stated too, we had that snowstorm come across the northern plains. Spring wheat and KC wheat were the leaders today in terms of the wheat complex, probably reflecting those weather conditions. And if we were having to pick up another storm coming through, that could even slow things down more. So again, when it comes to global food supplies and food security, wheat is still probably the leader in terms of that concern point. And realistic, it feels right now that this market's ready to break out one more time here, maybe go push back up into those $12 plus windows, because that may be where we need to be at this time frame. So I think wheat is actually the leader here over corn at this window. We'll have to see if it can continue because, again, the strength last night came from wheat, and then it pushed higher, obviously pulling that corn price through. And I think that could be the next piece that gives us that next run up on both those values. Will be being led by the concerns in the global wheat market.
Well, John, I hate to use the term the average everyday farmer, but it's the best thing I can think of right now. And you compare that to the funds and the big money people that are in these markets right now. What should the mindset be of the average everyday farmer right now, trying to market in this environment, looking at some of these incredible price levels, values? and entering a busy time of year with spring planting. I mean, what should be their, their mindset, the preferred mindset, maybe, if you could share some thoughts there.
There's a lot of pieces right now, and I talked to multiple people today, and I would say concern is starting to become a bit of a topic, in terms of what do we do with this. I want to go higher. I don't want to be greedy, but at the same time, I don't want to miss out because we do break this thing through to some of those levels that we've never seen historically. Selling corn at $8 and 750 might not be the best decision, especially after the hard years we had just a handful of years ago. Plus, you still got these input costs. You got to make sure those are covered in this window. We got insurance guarantee at 590. We're well above that here now for next year. So I've been saying this all the way through. Incrementally keep moving grain. Today was a day we did hit some targets, $8 and 750. I had some guys targeting those areas today to get some bushels sold, and they're going to take advantage of this price. You've got to. We've had almost over $1 rally off the most recent low here in corn. It's time to pull the trigger and move some bushels into this. How do you keep ownership over top? First off, you got to ask yourself, do you even want it? Do you want to put 30, 40 cents of risk on top of a good sale here when we're already talking historically high prices? But maybe you do a percentage and just make sure you got something in play, because the last thing you want to do is watch it go to 950 if we happen to see that type of a summer and you're sitting back going, wish I had something, over some of it. So it's all about balance in here. I really haven't been doing a lot of put work. I've gotten a few in at this time frame, so I do want to step those up here in the next couple of weeks, especially before the 1st of May again, as maybe that's a target zone I'm looking at again in here. They're not going to be great puts. They're not going to be at 750 on December because you just can't put that money to them, but you can put a pretty good floor well above that insurance guarantee just to kind of keep some balance in, and then still work some longer range out top call positions and still continue to build your base. But you got to feel comfortable. The one producer today is like, I got enough sold and I haven't seen rain in a while. I don't know if I want to sell anymore, so that's still the other part that they're balancing. Same thing on the soybean side of the equation too. You got some really good prices here. Still got room to go higher. Just set your targets, and we get a 20-cent move, you move a load. Just keep building your base. And next thing you know, you got a heck of a floor put together, because their biggest risk as the producer is still to the downside overall here.
John, great advice. Let's move to livestock. Hogs today. Whew, what a day there. That May contract stepping in as the lead month. Then we come in here despite the sharply higher feed prices with grains higher. Hogs had a really impressive day today. What's your thoughts there?
Yeah, some aggressive bull spreading stepped into that hog market today. And, we're hitting that seasonal window where hog numbers start coming down. So, I'm watching the slaughter totals or the estimates on a daily basis here. We're seeing if that's starting to happen, and just talking to people in the hog industry right now, the western part of the country, the PRRS issues were probably stronger than anticipated. You got $8 corn. We're not seeing expansion. I talked to a feeder pig guy today, and, he basically said the pigs aren't there. They can't find them, and some of these people got shackle space and things like that already kind of locked in, and they're doing whatever they can to get some pigs in. So when I hear stories like that, maybe the USDA numbers aren't still where they need to be after we saw in the last quarter of the hogs and pigs, and they still might be a little bit heavy, especially with some of the disease pressures that we saw this spring and late winter. So I like the hog market right now. We've had our correction. We've getting some bounce back. I not think we're going to push to new highs here, but maybe we get back up and check the bottom of the range here a little bit. I really like the 3rd and 4th quarter hogs. I think they're a little bit undervalued because of some of these things I just mentioned in terms of hog numbers. So I got some length out there for some people that want those hogs out in, December as well as into 2023, because this hog number is not going to grow anytime soon with corn at $8. And, at this time frame, and it still feels like the meat markets in general, even though cattle had a bit of a tough day today, is still a little bit undervalued.
Mentioning that cattle market, a bit of a tough day today. Not too surprising, especially in the feeder cattle market, just with the way feed prices were today. I think that would be expected. And live cattle started higher and then kind of faded as we went through the day, John.
Yeah, live cattle, that June contract popped out nicely, hit a pretty big wall of resistance, 137.50, and basically fell apart. and it led the market lower. I think some of that was just due to the fact, we were pushing $2-3 lower on feeders because of the price of grains moving the way they did today, and it just became a sell-all mentality, especially after, we've had a pretty good run in that cattle market the last handful of days. Really felt like money was moving in last week. Now we'll see how this market wants to play from here. Cash trade, I expect that to probably be steady to higher again this week. Some of the bids we were seeing at the end of the week and talking to individual producers, you're hearing calls that the Packers are looking for cattle right now. Weights are starting to come down seasonally here. We're expecting beef production to be lower in the second quarter than the first quarter. So there's some things I still find friendly in here. You got cattle on feed coming Friday. Let's see what those placements number are, with the lousy pasture conditions in these wheat pastures. We pulled a lot of cattle forward here, so it wouldn't shock me. We see placements come back down, and that might change the tone of the placement market here as well. So again, I'm still friendly cattle. Really ugly technical closes today, but bearish reversals to the downside on those front month live cattle. So maybe we see a little bit more follow through here. If anything, I still think we're in an uptrend. We're just going to keep grinding and chopping away. This weather doesn't help the demand side either across, at least in terms of the center of the country. So it'd be nice to see some nicer weather forecasts as we start building towards that Labor Day grilling demand, or Memorial Day grilling demand. Sorry.
Yeah, very, very true. How about that dairy market as we start this week? Any updates with what you're seeing there?
Dairy market continues to be strong, but kind of didn't like the chart action on Friday, and we got a little more follow through on it, at least again today. And, we pushed to new highs today, 25.79 on that May contract. Then we saw a mixed cheese trade today, and then it kind of reversed it over. So we're at an area here. If we can continue to see excellent demand, that's what's really pushing this market, is this product demand. Our products compared to the rest of the world are cheap and available, and we're seeing that really step in here. I still like this milk market going forward. It seems sometimes though, like when corn goes higher, milk has to go higher, just because they need to encourage the guy to keep one more cow in the barn to keep the production up. So we'll watch. We got milk production report later on this week too. We'll get those numbers for last month and see where things are trending in that regard. Again, like most of these commodity markets, if I'm a producer and I'm looking at these values, we're talking historically high prices. Your risk is more to the downside than the upside, and you need to be active. Definitely making sure you got something secured somehow, whether it's DRP program, buying puts, making just physical sales, and enjoying the price that's in front of you, even though maybe the margins aren't the best given the price of the inputs.
Well, John, great stuff today. As always, any final thoughts for us on this Monday?
Keep an eye on this natural gas market. It's really become the talk today. I usually keep CNBC television on next to me here all during the course of the day, and it was the buzz was natural gas. Looking at the export market, shipping liquefied natural gas overseas because of the issues with Russia, trying to get Europe what they need. We're over $8 on the board today, which we haven't seen since I believe 2009, if I'm correct with that. And then that chart is turning parabolic. So, that's going to lift this whole energy sector, and that's going to continue to be strong across the commodity space. So there could be our breakout market here that nobody was counting on, which is going to wind up being the natural gas market. Obviously, you got the bears and the bulls out there jumping around, but it sure feels like right now the supply is not there and the demand is going to continue to be aggressive. So it feels like that market, even though we're historically high, still got some room to go.
Well, John, if folks need a little advice with their marketing plan, I know they can reach out to you and the team there at Total Farm Marketing very easily. How could they do that, John?
Sure. Love chat with them anytime. Give me a call, 800-334-9779. Shoot me an email at johnh@totalfarmmarketing.com. And don't forget about our website, totalfarmmarketing.com. Again, like I always say, a lot of great information for our producers out there, free of charge. Take advantage of it. Education is power in these types of markets. So keep, stay in front of things the best you can, even though I know things are going to get really busy.
Well, John, we appreciate the time as always. Thanks for joining us on this Monday. Have a great week. We'll talk to you next week.
Sounds great. Have a good week.
John Heinberg with Total Farm Marketing, our guest today here on Market Talk. That's going to do it for the show on this Monday, April 18th. Find us at markettalkag.com. I'm Jesse Allen. Have a great afternoon.